Hey everyone, welcome to another video. So in this video, we'll try and understand the mandatory documents required to file a refund application on the GST portal in form RFD01 if you are a person involved exclusively in the export of goods or services or both from India to a country outside India, and you have a lot of unutilized GST credits from your domestic purchases. Now, to give you a background, typically under GST, there are two types of exporters. One, those who are involved in the export of goods or services or both and pay upfront IGST, for which the government says that once you pay IGST and export out goods or services, after some time automatically you'll get a refund of it. The second type of exporters are those who are involved in the export of goods or services or both, but do not pay any upfront IGST in the beginning. They will file an LUT called a letter of undertaking, like a bond with the government, stating that in case something happens, some problem happens with respect to the exports, they will pay GST in future. So if an LUT is filed before export takes place, then you need not pay any IGST. Under the cover of an LUT, you can export out goods or services or both without payment of any GST. Let's say, for example, you are planning for next export in April 2026. So ideally before April, let's say by 31st March 2026, you need to file an LUT. LUT is a simple application on the GST portal, an online form where you enter the basic details and the form gets auto approved. So file it before your export, and if you do that, you need not pay any IGST, GST, and you can export goods and services freely under GST. Now, our discussion is focused on the second type of exporters, those who are involved in the export of goods or services or both and have filed LUT, therefore no need to pay any IGST. Now, for them, you will have a lot of purchase GST because they would have to make the services or make the goods that they are planning to export without GST, but they'll have a lot of inward supplies for which they have to pay GST to their domestic vendors and all that. Now, this obviously cannot be set off against the output GST because there's no output GST at all. They are involved in the export, so no output GST, no GST liability, and therefore the question of set off does not arise. And therefore the government says that, okay, I understand there's a lot of accumulated GST, ITC credits, and you can make an application and get a refund. The department will refund you within so many days if you file a refund application in RFD01 with some prescribed documents. So you can claim a refund of both inputs and input services if you are involved in the export of goods or services without the payment of IGST. So our discussion here is basically to understand what are these prescribed mandatory documents that you must attach along with the RFD01 application, because at the end of the day, it is money coming in from the department. So department will all the more be quite strict in checking these documents. So what are these mandatory documents? Definitely, you need to upload a PDF copy of your 12-month GSTR 3Bs or ones. Now, RFD01 application can be done on a monthly basis, on a quarterly, or most commonly it is done on a yearly basis. So if it is done on a yearly basis, you need to upload the PDF copies of your monthly GSTR 3Bs and monthly one returns. That's number one. Number two, you will have something called as FIRCs, foreign inward remittance certificates. Now, these are certificates issued by the bank, which is a proof of the money coming into India. The department on the other side, when they check, they need to get a assurance that, okay, for the value of services or goods you exported, you are getting the money from the foreign customer within so many days. The proof for that is the FIRC, which is issued by the bank. And for each invoice, for each receipt, you'll have an FIRC being tagged. So upload the PDF copies of the FIRC. GSTR 2B is basically something available on a GST portal which reflects a summary of whatever has been furnished by your domestic suppliers and vendors, and whatever is appearing there, only that you can take and claim in GSTR 3B. So obviously 2B will be equal to or greater than GSTR 3B, and that is what you will avail as refund of unutilized ITC if you're 100% involved in the export of goods or services without the payment of IGST. So 2B every month download it, convert it to PDF and upload. Well, if you are a goods exporter, then definitely customs department will issue something called a shipping bill, which will have the value of the goods, value of the invoices. That is the proof that the goods are going out or gone out. And then you have export invoices, whatever invoice that you've raised for service exports or goods exports through your billing software or in your books of accounts. Upload a copy of each of that onto the RFD01 application. And LUT is a must. Now, if you're availing refund for the financial year 26-27, then you ought to upload the LUT copy availed or approved that you have for 26-27. And then you have an undertaking as well as a declaration, which should be on the letterhead, which should be on your own letterhead, basically. And undertaking that the ITC, the GST ITC for which you're claiming a refund is not ineligible, and you have paid the taxes to the government indirectly to the government through the supplier. A declaration also on your letterhead saying that you have not passed on the benefit of GST ITC to any other person, because you have to pay GST, get a credit, you cannot utilize the credit, therefore avail refund. So there's no question of passing on the GST credits to any person. So a declaration to that effect is also required. And then you need something called a Annexure B. Well, Annexure B in a prescribed format is what is suggested by the GST department, which is otherwise a statement for the GST ITC. It has the details of all your unutilized ITC of inputs and input services, and the total of that should be equal to the refund amount of GST ITC that you are going to claim via your GSTR RFD01. And then you have a statement 03. Statement 03 is again a macro file, the format of which is given by RFD01, where on one side you have sales, which corresponds to the values shown in your GSTR1 monthly returns. And then on the other side, you have the FIRC values. For every invoice, it is assumed that you have an FIRC because it represents the value coming into the amount of money coming into India from the foreign customer for the invoice that you raised. Now, it could so happen that for one or two or three invoices together, the foreign customer is making a payment in bulk for which you will have only one FIRC. So tag 3 invoices to one FIRC. That is also possible in statement 03. So statement 03 will give you a reconciliation between sales that you've already shown on your GST portal and in your books of accounts, of course, and the FIRC values. And a CA certificate is also required if you are availing a refund amount of ITC unutilized for more than rupees 2 lakhs. So if your ITC refund is more than 2 lakhs, then you must approach your auditor or any other CA and try to get a certificate from him. The CA will give you a certificate on his letterhead stating that the amount of ITC, let's say it's amounting to 2 lakh 50 or 3 lakh or 4 lakh, whatever, is correct, and that there is no ineligible ITC amounts involved, and the SSC or the person is eligible to claim a full refund of the same. Now, what if the value is not more than 2 lakh rupees? Then what the department circular says that you do not require a CA certificate. A self-certified certificate is only required in that case. You need to state that the ITC that you're claiming is correct, it is not ineligible, and that can be on your letterhead also. So this certificate is same as a declaration that you're giving. So the amount of ITC is not exceeding 2 lakh, it is less than or equal to 2 lakh rupees, then a CA certificate is not required. You're anyway giving a declaration that the ITC has not been passed on and undertaking that eligible ITC, that ITC that you're claiming refund for is not ineligible. If it is exceeding 2 lakh, then you need to get a CA certificate, of course. So these were the mandatory documents required to be attached along with the application in RFD01. If you count including that for goods, there are totally 12 documents that you need to upload. And like I said before, these documents become very important because ultimately it's a case of money coming into your pocket from the government's pocket. So the scrutiny level will be much more, checking will be much more, they'll be more strict with checking all these documents. So make sure that these documents are prepared, are clear, are correct, and uploaded in the right form within the right size limits and all that, what is applicable on the portal. And these 12 documents are required for filing an application for those involved in the export of goods or services or both without the payment of IGST on the filing of a letter of undertaking called as LUT. Well, I hope I was able to make things clear in this particular video. If you liked the video, you could show support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.